Bitcoin is making a move down today. So is the bull trap engaged? Has the bull trap fired? Um, let's talk about Bitcoin and the broader markets in general. But as we know, as goes Bitcoin, as goes the entire cryptocurrency market. So right away, when you look at what's happening right now, there's a couple of things. When you have a drop like we have in Bitcoin right now, it's trading down at 41 or 48,113. It's been down in the 47,000 level. Couple of things. One, people are taking profits. We've had a heck of a run, a lot of green candles on the daily, weekly. So could be a lot of profit taking. We have options expiring on Friday. We'll talk about that a little bit. But here's another thing, article right on the, again, right on the front page of CNBC. Bitcoin and cryptocurrencies have taken front page of CNBC and other financial news networks pretty much every day. About the Coinbase issues that are going on and people getting hacked and losing all their funds on Coinbase. Makes you stop and think. It can kind of scare you a little bit. And then Bitcoin tops 50,000, hitting more than a 3-month high. Bitcoin whales jump back into the market during cryptocurrencies, rebound to 50K. So there's a lot of really good news out there, a lot of bullish news for Bitcoin and cryptocurrencies. We know that more and more entities are adopting. We have a lot of companies, a lot of investment funds, a lot of banks that are getting into trading options and futures. So we have a lot of broad scale adoption happening. We have a lot of ETFs in the pipeline. We already have some ETPs, exchange traded products over in Europe that are similar to an ETF, and in Canada that are already out there. So a lot going on. This article, Bitcoin's biggest investors appear to be upping their positions as the price recovers. Cryptocurrency accounts holding roughly 50 million or more of Bitcoin have steadily increased their buying since the end of June, according to new data from blockchain chain analysis. That bullishness continued into late August as prices rebounded above 50,000. The Bitcoin accumulated by recent large investors is related to the medium-term change in Bitcoin price. Bitcoin whale activity has been linked to price action this year. Those larger investors were a driving force in the market until late February. As big investors acquire more digital assets, prices typically rise over 28 days. So that's one article talking about the activity of Bitcoin, the whales buying. And there's other ones out there too, where on-chain balances of Bitcoin, we had a recent deposit of about 30,000 Bitcoin on chain. That signifies selling. This happened over the last week, which could be one of the reasons we're seeing the downward pressure on prices right now, because we are seeing Bitcoin brought back on to exchanges. Inflows and outflows is something that a lot of people track on Glassnode. Will Clemente, this is his chart, writes a lot of articles on it and analyzes that data. A lot of people follow Glassnode. Inexpensive data on Glassnode if you want to subscribe to that to kind of check on-chain analysis. But inflows and outflows typically indicate when Bitcoin is moving off exchanges and going into wallets. That will generally signify holding, but it's also a security measure, custody measure, and then it comes back onto the exchange to sell. So that could happen over days, weeks, months, depending on what the strategy is and how long somebody wants to hold. Here's another one. Here's why Bitcoin bulls might trample the 50K ahead of Friday's $2 billion BTC options expiry. We have $2 billion worth of options that will expire on Friday, the 27th. Some analysts say that a strong call buy option activity on August 22nd was likely the catalyst for the recent pump to $50,000. Digital asset trading firm QCP Capital mentioned in its market update that the entity has been consistently pushing options prices higher in the last few weeks. The activity, which took place during the morning trading session in Asia, aggressively bought bullish options in chunks of 100 BTC contracts each. The report also mentions exhaustion of regulatory concerns in the near term, as crypto-related decisions from the Senate Banking Committee and regulators are unlikely to bear fruits until 2021. The bears are looking at different on-chain analysis, where Glassnode included some concerning data from Bitcoin on-chain activity, such as the amount of entity-adjusted transactions has not responded during the bullish action, less activity as the price has been going up. So that's not a good sign. And again, Friday will be an important test of that $50,000 level, where 4,372 Bitcoin option contracts will expire. So here's some scenarios of what happens at different price levels. If the price of Bitcoin is below 45,000 by Friday, then 4,040 calls versus 2,500 puts, the net result 69 million. For average to neutral bullish instruments, if it's above 46,000, 6,500 calls, 1,300 puts, the net result 239 million, favoring neutral to bullish instruments. Above 48,000, 7,400 calls, 420 puts, the net result is 335 million for neutral to bullish. And if it gets above 50,000, there's 12,000 calls, that's buys, 35 puts versus sells. The net result, 600 million advantage for neutral to bullish instruments. The above data shows how many contracts will be available on Friday, depending on the expiry price. There's no way to measure the net result, as each participant and investors could be trading more complex strategies, including market neutral, using both calls and puts, as well as spot price action to kind of hedge their bets. So there seems to be enough incentives for them to defend the $48,000 level and even try for a more significant push above 50,000. So it'll be an interesting week to see how Bitcoin closes out. And as we speak right now, the price is down to 47,947. We've been kind of up and down. So a lot of bullish indicators. We had a really good run. So we expected a pullback. We talked about that yesterday, how you have to take some profits. And we expected a pullback and a correction, 10%, 15%, even 20% wouldn't be unusual right now. But here's something I want you to look at, and you can go research this yourself. So I found a leading indicator. So these are moving averages. And a lot of times these moving averages, death cross, golden cross, those are lagging indicators. In other words, the cross will happen oftentimes after the action. I found a cross between the 21 weekly moving average and the 200-day simple moving average. And as you know, one of the best things to watch right now is the 200-day simple average, simple moving average. If you're above the 200-day simple moving average, you're doing good and you're in good shape. If you're below it, you're generally in a downtrend or a bear market. So that's your main indicator. But when you take the 21 weekly moving average, and whenever it crosses over the 200-day moving average, it always does it. So this is 2013 right here. We had the initial peak. 23 weeks later, on this 2013 timeframe, we had the cross. We had where the 21 week crossed over the 200-day. And this isn't a death cross or anything like that. It's just a cross that I kind of happened to pick up on looking at different moving average scenarios to try to find some leading indicators. And this is really interesting to see here. 23 days after we had that cross, we had a little bit of a pump, and then we went into a downtrend for about a year. After that cross happened. It was a straight downtrend for about a year. We had a little bit of up and down action, but it was primarily down with a few bounces here or there for about a year. That's your 2013 bull market peak. Now we're going to go to 2017, and we're going to look at what happened in 2017. Same thing. We had the 2017 peak. We had a little bit of a down action, a couple of little bounces, a little bit of a downtrend. We bounced back. This one was about 21 weeks after the peak that we had that cross, where the 21 weekly crossed over the 200-day simple moving average. And then again, that led into a downtrend for about a little over a year. This one was, or right at about a year, May 2018 to, it was about a year back into a downtrend. Then we started moving up again. And this is that 2019 timeframe. Now, here's what's interesting. We started to rebound after the 2018, 2019 peak and down market. We started coming back up. We had a little bit of a peak here in July of 2019, where Bitcoin had peaked, at 13,000, but kind of closed out at 11,500. Same thing. We had that cross right here. We had a little little downtrend from that rebound. We started trending down. We had a little bounce. And then we had that cross again about 21 weeks after this little peak here is when that crossed. And then that's when the coronavirus dump happened. Of course, you couldn't foretell that or foresee that, but we had that little pump and then it dropped off. Again, it led that drop off for the coronavirus dump, which is very interesting. Now, here we are. This is our 2021 peak. And this time the cross happened 20 weeks. We're about 20 weeks after the peak. So it's a little bit sooner. First one in 2013 was 23 weeks. The second one in 2017 2017 was 21 weeks. Then that little rebound in 2019 was about 21 weeks. This one is at 20 weeks. We've had this cross. Every time we've had this cross, except for the coronavirus dump time, we had about a year of a downtrending bear market. After the coronavirus dump, obviously that didn't last very long because the Fed stepped in. Everything was trending down, and the Fed stepped in, gave everybody money, and off to the races we went. So just something to look at, just a little bit of caution to take. And again, I always want to be, as an opportunistic investor, as I've said before, I'm not a technician. I'm not a technical analyst. I follow the technical analysis of others, and I kind of form my own opinions. I look at trends, patterns, price action, things like that to form my own opinions, to try to stay ahead of the market. I'm an opportunistic investor. I look for value anywhere it can be found in any market, whether it's real estate, stocks, cryptos, businesses, it doesn't matter. I'm always looking for how do you add value? How do you increase value? And I've always been a speculator. So what initially attracted me to Bitcoin specifically, it's digital property. So I look at Bitcoin like I look at real estate. It's digital property. A lot of the other assets, Ethereum, I look at that as kind of like the early internet of things, of crypto. And then a lot of the other protocols, tokens, and activities in the cryptocurrency space, I look at as venture capital. So you have your tokens, you have your different different programs, and your different types of products in the cryptocurrency space. To me, that's just venture capital. So it's like buying a company and investing in companies. So that's what I like about that in terms of use cases, in terms of projects, things like that within the overall cryptocurrency space. So as a speculator, I'm always opportunistic. I'm always positive. I'm neither bullish or bearish. What I talk about is you want to identify market trends. The trend is your friend. You want to lead the market up. You want to lead the market down. So I'm not bullish or bearish. What I do is I want to know, where is the market? What's the trend, and where is it going? And how do you know when that trend's changing? And a lot of other markets, it's pretty easy to know when the trend is changing. In financial markets and cryptos, it's a little bit more difficult. You can watch the macro environment with the Fed and what they're doing with monetary easing, interest rate policy, things like that makes it easier to spot. If they put the foot on the gas, it's off to the races. If they pull their foot off the gas, well, it's time to pull back. Cryptocurrencies are a little bit different because it is a highly speculative market. We are in the early stages. We've got a lot of regulation on the way. We've got a lot of institutional adoption on the way. That's going to largely affect market cycles, price action, volatility, things like that. So those are the things to keep an eye on. But yesterday we talked about the trend line. The most important trend line for Bitcoin right now is this current uptrend that we're in. We've reversed this downtrend. Now we're in the uptrend. How do you know when that trend changes? When this trend line gets broken and you're closing below it, then you know that we have a change. And again, there's that 200-day moving average. That's key. As long as you're above the 200-day moving average, you're good. If you're below the 200-day moving average, then you're not. So let's switch over to the daily and take a look at some price action here on the daily. And here's the thing to look for in terms of the price action. So there's our trend line right there. And what we want to make sure with this trend line is, let me go ahead and turn these other moving averages off here. I'm not a big moving average fan. I mean, that 200-day obviously is consistent and one of the best ones to look at, but I like to see the trends, the uptrends, the downtrends. And what you can see that we have going on here is a couple of things. You can see very similar price action developing on this current trend with 1, 2, 3, 4 peaks. And then we'll see how this develops over here. Kind of matches up with what we had here. 1, 2, 3, 4 peaks. And then we had our first lower low and lower high, indicating a reversal of trend. So we're kind of in the same mode now. So the question is, what's this going to turn out to be? So there's two things to watch to know whether or not the trend is intact. One, or the trend's going to continue. One is this trend line. As long as we're above this trend line, we're okay, because we're still putting in lower highs until we cross really 65,000. Everything's a lower high until you cross 65,000, but you want a lower high above the last lower high, and then your lower low. The key is wherever this closes, as long as it closes above this low, we're okay. If this comes down at any point, you want to look left. How do you know the trend is broken? Look left. If you close below that last lower, higher low, then you know you've broken trend and you've put in a lower low. Now you've reversed trend. So you would have a lower high and a lower low below this particular trend. So what we're looking for here is a higher low and a higher high on this trend, lower high overall, higher high on the trend, to know if this trend is still intact and you can count on it. We don't know ultimately what's going to happen. I know there's a lot of people still calling for this to come back quite a bit. Now, here's the thing for me, and this is a lot of what we talked about over the last few days and weeks, is the price action. This is obviously, orchestrated, manufactured, automated trading that's been going on, driven largely by quantitative hedge funds, quantitative strategies, things like that, cross exchange. A lot of this price action looks almost identical across a multiple of assets. That one's a little different. If you go on to the hourly, that's where you can see even more consistencies in these assets. So this is all highly coordinated, highly manipulated, which all markets are. So the real question is, you just need to understand the trend so that you can go along with it, not against it. You can work with the trend and earn with the trend versus trying to fight the trend. And then ultimately try to figure out what the end destination is in this, with all this action and everything that's going on. What ultimately, if this is all algorithmic trading for an end, for a certain position by institutions or an institution, what's the end goal? What are they getting to? Are they really trying to drive price up as high as possible, or are they trying to drive it to a point to liquidate their positions and then reaccumulate again, like we had here? Accumulation phase to mark up, and then we drop down, we accumulate again, we mark up, and we drop back down. Or are they going to mark up all the way to that $100,000 or beyond level, and then we continue down right now? And if you think about that strategy, that would not be good overall for an institution. If your goal is long-term and you're looking for long-term value and hold, it's not in your best interest to drive prices up exponentially and then drop them. That doesn't help anybody. It chases a lot of people out of the market, which they may very well be trying to do so that they can accumulate as low as possible down here and drive retail out and control the market themselves. So that could be one strategy. Another strategy could be they've accumulated along here. They're pumping the price, trying to get it up, and then maybe distribute across a little bit higher level and then ultimately drop back down. But remember, that key level of $50,000 is the main 50, 51, 52,000. That's your main level of resistance that you have to get through and close above to continue trend, to know that you're in the clear and that Bitcoin and all of the other cryptocurrencies can continue the march forward, because as goes Bitcoin, as goes the market, right? So if Bitcoin's doing well, everything else can continue. If Bitcoin is going down, everything's going down. I don't care what it is. Cardano, even with all of the excitement around smart contracts coming to Cardano, it still has to work. They still have to execute. The old saying, buy on the rumor, sell on the news. This one you can buy on both up until it's time to execute. And if they execute and things go well, it could be off to the races for Cardano. It could go even higher. If they can't, it's going to drop down into the wastelands of where it came from, 60 cents a few months ago. If you got in on that, that was a great trade. Matic is paring back a little bit again. Not too far from where it was trading at. Around, Matic's been down around 60, 70 cents at the bottom, somewhere around there. A couple of points back around $1. So Matic's got a good potential as we go along. So anyways, just remember, as goes Bitcoin, as goes the market. So keep an eye on Bitcoin. There will be some random stuff here and there that'll spike without Bitcoin, but it won't be long lasting if Bitcoin is not doing well and Ethereum is not doing well. So that is all I have for today. Just wanted to bring you up to speed on that. Make sure you look at that moving average, go back test it against history. It looked to me like a really good leading indicator. Doesn't necessarily mean anything's guaranteed. It just means that for the 4 times that we looked at in the past, it was pretty reliable in terms of what came afterwards. But if the trend continues and reverses and the institutions want to bring the price up, then none of it's going to matter. It'll go in the direction of the money. The capital has the loudest voice, and that is where price action is going to go, is where the capital wants it to go.